Today we will talk about crypto market via stock market, where to invest. So before we get started, make sure to hit that like button, also subscribe to my channel. Cryptocurrency has taken the world by storm, especially during the last few years. After having peaked around $3 trillion in 2021, the total value of all these digital currencies sits at about $1 trillion, according to coinmarketcap.com. Of these, Bitcoin is the most popular, worth more than $400 billion itself. Investors have swarmed to this digital gold rush, often with little knowledge and a lot of hope. Cryptocurrency's rapid appreciation has many investors questioning the place of stocks in their portfolios. But there are numerous differences between stocks and cryptocurrencies. The most important is that a stock is an ownership interest in a business, backed by the company's assets and cash flow, whereas cryptocurrency, in most cases, is not backed by anything at all. If you're buying cryptocurrencies, it's important to understand what you're purchasing and how they compare to traditional investments, such as stocks, which have a solid long-term track record. In considering cryptocurrency versus stocks, investors must balance comfort and risk. Investors in digital currencies have had to live with wild swings in value. The roller coaster ride of stock value can be dizzying, but not quite as wild as crypto's ups and downs. Understanding the strengths and weaknesses of each asset and the role they play in a portfolio is necessary to meet the investor's goals. Should you invest in cryptocurrency or stocks? Any savvy investor needs to know exactly what they're investing in. It's crucial to weigh the risks and rewards of investing and what will drive the investment success. If they don't have this kind of information, they can't make the calculation. In this case, it's not really investing. It's much more like gambling. Stocks. A stock is a fractional ownership interest in a business. It's easy to lose sight of this if you become overwhelmed by the wiggling stock prices and the potential for profit. As a legal ownership stake in the business, the stock gives shareholders a claim on the assets and cash flow of the business. These back your investment and provide a basis for its valuation. Why stocks rise and fall? A stock price moves as investors assess the future success of the company. While investors may become overly optimistic about the stock in the short term, the stock price ultimately depends on the company's ability to grow its profits over the long term. That is, a stock rises in the long term due to the success of the underlying company. For a stock to be a successful investment, the underlying company must perform well over time. Here's a step-by-step guide for how to invest in stocks. Stocks at a glance. In considering cryptocurrency versus stocks, remember that stock conveys ownership of a piece of a company. A company's founder fully owns the company at its inception. As the company seeks to grow, the founder can sell ownership shares to investors. At some point, the company might want to sell shares to more investors in a public offering. This enables the company to raise more money and for early investors to realize a return on their investment. Even when publicly traded, a company can sell more stock. The issuance of new stock dilutes the value of the current shares, but enables the company to raise money. Common reasons for selling additional stock are to raise capital for expansion, hire employees, increase production capacity, and build facilities. Owners of stock can vote to elect members of the board of directors and on corporate policies presented at annual stockholder meetings. They generally have little say in how a company runs from day to day, but if enough investors team up, they can have an impact on the company's direction. Cryptocurrency. Generally, cryptocurrency is backed by no hard assets, specialized stablecoins being an exception. And that's the case for the most popular crypto coins such as Bitcoin and Ethereum. A cryptocurrency may allow you to perform certain functions, such as sending money to another person or using smart contracts that automatically execute after specific conditions are met. Why cryptocurrency rises and falls? Because cryptocurrency is not backed by assets or cash flow. The only thing moving crypto prices is speculation driven by sentiment. As sentiment changes, prices shift, sometimes drastically. So cryptocurrency is driven only by the hope that someone will buy it for more in the future. What's called the greater fool theory of investing. While others believe that the unregulated nature of cryptocurrency makes it too risky to support a full-fledged financial system. Cryptocurrencies lack government backing, and how much the market will bear determines their value. Cryptocurrency versus stocks. The core differences. Cryptocurrency and stocks are valid investment choices, but they serve different purposes in a portfolio. Stark differences exist in how they're bought and sold, as well as how they serve an investment strategy. Here's a look at key characteristics of crypto and stocks. Ownership. The brokerage makes trades and holds stock in the buyer's name. Newer firms like Robinhood have streamlined the process, but their offerings aren't as robust. A buyer also has to disclose personal information, such as their social security number and street address. Going through a brokerage provides a level of security. One of the perceived benefits of crypto is its anonymity. No one needs to know who the crypto buyer is. A crypto owner holds assets in a virtual wallet or on a storage device, such as a USB drive. The downside of anonymity is that responsibility for security falls on the owner, who has to keep track of where the crypto is and remember a password of at least 16 characters. Owners have little recourse if hackers clean out their crypto wallets. Exchanges. Stocks are traded on accredited exchanges throughout the world. They offer stock buyers security, stability, and transparency, and are built to handle large trading volumes every day. Exchanges are strictly regulated, although specifics vary by country, providing protections to buyers and sellers. Exchanges for buying and selling cryptocurrency are newer. Dozens, if not scores, of crypto exchanges exist. Two of the largest are Binance and Coinbase. Some exchanges work with third parties to smoothly exchange conventional currencies, such as the US dollar, for crypto. Volatility. Sudden and rapid changes in stock values are as old as stock exchanges. A piece of good news can launch a stock higher, just as bad news can send it lower. As the terms Black Friday and Black Monday attest, stock markets can plunge in a day. Usually there's an explanation, either economic or technical, such as a program-driven sell-off. Investors might see the value of their portfolios tumble, but total losses are rare. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.